What is going on, YouTube? Back with another video. Today I'm going to be breaking down market structure for beginners, okay? And I'm going to do it in the shortest amount of time possible. So I'm going to give you the game so you can understand trends and understand confirmations without having to rely on so many indicators. The price gives you so much that you should be understanding and seeing, but if you don't know what you're looking for, that's where you can kind of get a hiccup and then you're trading in the wrong direction and you're taking unnecessary losses. So I'm going to break it down in the shortest format possible. Don't forget to like and subscribe and comment if you found this video useful. Let's get to it. Right, guys. So before we begin, there's a simple question I want you guys to ask yourself, okay? And that is, can you identify trends correctly? Okay, using the market structure, can you read the price action correctly? Now, a lot of traders, okay, they're mainly taking their losses due to not identifying trends properly. I guarantee it. Like your biggest losses are trading against the trend or not following the overall trend direction. Okay. It's very difficult to become profitable if you're always trading against the trend. Yeah. If you follow the trend, okay, there's a generic saying in trading where they say the trend is your friend. To an extent, that is very, very true. Okay. Meaning it's easier to trade with the overall trend direction than it is to catch a reversal. Yeah. Everyone's trying to catch a reversal. It's going to reverse from here. That's difficult. If you trade with a trend and you know where you are within the structure, it's a lot easier. Okay. So more than likely, when you can't identify the trend, you're too zoomed in. Okay. You can't read the price properly because you're probably on too small of a time frame and things and such. Okay. If you can master how to read price through the market structure, you will see greater results in your trading career. I guarantee you that. Okay. You'll start to get those breakthroughs that you're yearning for, that you're wishing for. Okay. Trading with the trend and understanding the trend is critical. So if we look at this drawing here, there's only three things, right, that you need to understand about market structure in regards to what price is doing. Okay. The market is either trending, it's either retracing, or it's either consolidating. There's three things. That's it. Trending, retracing, consolidating, right? Don't overcomplicate it. So if we take bullish price action first, okay, uptrend. For those that know what bullish means, it's an uptrend, right? There's one thing you should be seeing if you can confirm this in an uptrend, okay? It starts with a low, it creates a high, it should be creating a higher low, it should be creating a higher high, a higher low, a higher high, and continuously doing that. As long as the trend is bullish, that's what you should be getting. So if we go to bearish, okay, you're in a downtrend, right? You start at a high and it generates a low. You get a lower high, it should create a lower low, and it should create a lower high and a lower low and continue. If it's downtrending, that is what you're looking for. Lower highs and lower lows. If you're bullish, higher lows, higher highs, okay? Now, if the market is consolidating or ranging, whatever you know the term to be, it's not trending. There's no direction. It's going sideways. When a market is going sideways, okay, it's not the best price action to trade because you don't know which direction it's actually trying to go in, right? You're going to be frustrated. If you're in a consolidation trading, it's very frustrating to trade because you're thinking it's going to go higher or you're thinking it's going to go lower. And then you're in the trade and then it stops and then it comes back on you. And then you get in the opposite way, it comes back on you and stuff. So don't really look to trade a consolidation. It's the best time to observe because what you understand about consolidation, right, is people are buying, people are selling. There's going to be liquidity above and there's going to be liquidity below. Okay. You want to be in a bullish market or you want to be in a bearish market because these are going to yield bigger, returns. Like when you can catch an expansion or you can catch a reversal, it's going to be easier to do so in trending markets than it is to do it in a ranging market. Okay. So, one thing to note about bullish price action and bearish price action, okay? If you are anticipating the market to give you from low to high and you're anticipating a higher low, when the market is pulling down, okay, that is a retracement, okay? So, when the market is retracing, it's very important that you understand that is retracing. Now, the simple reason I'm saying this is because a lot of people they get into it and they think, oh, yeah, the market's turned bearish or it's coming down, it's bearish. No, that's far from what it is doing, right? In order to get a higher low, it has to pull down. That doesn't mean it's bearish. If you're still a bullish trend and it's pulling down, the market has not changed. It's just retracing in order to generate a higher low point. Okay. And then you should be anticipating an expansion and a continuation. Okay. So very important that you understand just that element of it. Otherwise, it starts to get confusing. Identifying that is critical, right? Because I don't want you to keep flip-flopping thinking, okay, we're bullish, we're bearish. That's not what it's doing. Okay. If you've got a higher low and you know you've identified it as being bullish, you're expecting that expansion to create a higher high. Once it creates a higher high, you're expecting a higher low to be created again. Okay, that's what it's doing, right? So believe in that. You have to believe in it. This is a retracement. It's perfectly normal for price to retrace. It doesn't mean something is changing the actual trend direction. Okay. Now, same with if we're bearish, okay, it's made a high, you got a low, you're anticipating a lower high. If it's going to be a structural point being made, that is a retracement to make the structure point, right? It doesn't mean, oh, we're now bullish. So the terminology and how you're approaching it from that perspective is equally as important. Okay. Once you've got a lower high made, you're expecting the expansion to the lower low. So why I'm drawing it like this is because you need to know where you are within the structure. Okay. If you're going to engage with it, that doesn't mean, let's say this is retracing up. You can be a buyer in the retracement leg, 100%. But you got to understand that it's short term because the actual trend is bearish. It's a downtrend. So it's a short term move to the upside to create a potential lower high point, and then you're expecting the expansion. This move, right? The expansion moves are going to yield bigger returns and bigger trades for you than trading the retracement, right? Expansion here is bigger than the retracement. So when you get that right, yeah, you're going to realize that potentially waiting for the price to get back in sync with the trend, you can ride it down and start to hold trades over a longer period of time and stuff like that, right? And yield bigger results. So I hope these drawings, write these down, take notes, look at what it should be doing in terms of if you're in a bullish trend, if you're in a bearish trend, where are you? Now you can actually look at the price and be like, where are these points? Okay. So let's actually move over to the price so I can show you some of these as well and see what that should look like to you. Now, this is the part that everybody that comes into the game when they're reading price and they're trying to find the structure points they get wrong. I guarantee you, right? This is the issue. Now, we can clearly see that we're downtrending. Okay, we're making lower lows and lower highs, right? So if we just pick out certain points, so here we had a lower high made, we swept this liquidity here, we made a lower high here, excuse me, this lower high here, and then we started continuing down lower. Okay, so from here to here. Now we've made a new low. Now, what we're not going to do, right, is class this as a retracement. This price action here, right, is not a retracement. It's too shallow. Okay, so every little tiny pullback that happens doesn't have the same validity. It shouldn't be classed as a pullback. This isn't a pullback, right? And then the market drops lower. This isn't a pullback. The market drops lower. None of this is a pullback, right? This is range and price action. Okay. So and then it drops lower. So what you have to understand is if the market isn't giving you a retracement or a pullback, right? Don't deem any any candle that goes against what's being printed as a pullback, right? Because that's where you get confused. Because really it's from up top to down here. That's all the structure is done. Yeah, there's no pullbacks here. So when the market does pull back here, a lot of people then think, oh, look, the structure's changed. And that's where they go wrong. The structure hasn't changed, right? These are not retracements. So it's very critical that you understand that. So from up top here to this bottom here, anywhere here, we're looking for a lower high to be made. Anywhere. It could retrace further, but anywhere from here to here is good to make a lower high, right? So it's important that you understand that. So look, the market then drops, right? The reason it drops is because those that are thinking, yeah, look, the structure's changed, I'm now buying. Right now, there are some buying opportunities like here and here, but that's not what it does. It drops lower. So you have to understand that all we have is lower high, lower low, right? And then we make a lower high here. Okay, we're anticipating a lower low because this is a pullback now, right? The more you zoom out and where you are in price, you have to understand what the price is giving you, what the structure is printed, and what it hasn't yet printed. So instead of thinking, lower high, this is a lower low, this is a lower high, lower low, don't do every single marking as a retracement, because that's where you're going to confuse yourself. Yeah, it's not a retracement. So stick to this as well. When you're trying to find out the trend, stick to the 4 hour, stick to the daily, stick to the bigger time frames, the weekly, the monthly. That's when it's just not as confusing. This is a 4 hour, right? None of this price action is 4 hour price action. It's going to be 15-minute, 1 hour price action. That's where you're seeing the price so small, the volume so small. But in terms of where we're playing in, we're playing from here to here to here. We're expecting a lower low right here, and we get one. Excuse me. Right there, we get one. Okay. We're anticipating what from there? A lower high. Okay. We're anticipating a lower high. There you go. Did we then continue lower? So understanding what price is doing and what it isn't doing is critical, right? Don't get confused by every little thing where the price is now it's dropped and then it's giving you a little bit of a move back up. No, it has to be a valid retracement. Okay, very, very imperative, excuse me, that you get that right. Otherwise, you're trading against the trend. That's where the losses are gonna start coming in, and it's unnecessary losses too. From there, okay, if we're still bearish, okay, this is the lower high point that's been made. We get a lower low. We're expecting a lower high to be made within this range. So from this top of this lower high here to this lower low, the lower high can be made anywhere within this region as long as it doesn't take out that lower high at the top there. So you don't know where it's going to be, when it's going to create, how it's going to create, but that's what you're anticipating from a structural perspective, right? And then what we then find is that the structure actually changes. Okay. It goes above here. It's not supposed to do that. If the trend is going to continue to the downside, it's not supposed to do that. So when you have the structure starting to change on you, you have to now get in line with, okay, let me go and check the daily time frame. This is a 4 hour chart, the 4 hours broken structure. What does that mean for the daily time frame? That's what you got to be thinking of. Okay. Because the bigger time frame is going to be impacted by this time frame breaking structure. Right. The more you start to learn about what time frames should be doing what from a hierarchy perspective, right? Then you won't get things wrong. I'm telling you, you just won't get it wrong. So there's the structural point break there. And then when you zoom back out, you start thinking, okay, what does it mean for previous areas of higher time frame structure? In terms of up here, we started to fall down here. We pulled back here and then we fell down here. But a 4 hours broken structure. All it means is that price, this is where we're currently at, is starting to form a higher time frame retracement potentially, right? Because this is where we are right now, meaning that we are looking at a higher time frame retracement to potentially get the next leg down, unless the structure starts breaking on these time frames. But you have to always revert back to what I say is the higher time frame. Every time frame has its own structure. It's just going to look a little bit different, but every time frame has its own structure. So you have to bear that in mind in regards to not over analyzing, but zooming out when you need to zoom out. If something happens on the 4 hour, that's going to have an impact on the daily. If something breaks on the daily, that's going to have an impact on the weekly. And as you continue going up in time frames, that's what you'll find, right? So in regards to breaking down structure, don't operate off too big of a time frame, right? It's good to know, like, if you get the month close out, you want to see how the monthly candle closed. You want to see how every weekly candle closed. You want to see how a daily candle closed, right? But you don't want to just be looking only on the monthly time frame or only on the weekly time frame, because it's going to take a longer time to actually get that candle to print in regards to what it's trying to do. The 4 hour, the daily is the best to work out trends from a day-to-day trading perspective, if that's what you're looking at. And another thing, when you're actually looking to find out a trend, you don't care about what price was doing 5 years ago, right? You don't care about the trend 5 years ago. In my opinion, you should only care about the last 12 months, 18 months. What was the trend? Right? Because if you start going back too long in time, you start drawing up all these, lower highs, lower lows, higher lows, higher highs. When you start marking up too much and you're going too far back, the trend 5 years ago is not relevant to right now, right? You just want to think about, okay, what was last year's price action like? Where are we currently at? Because then you can start tallying up where you are, okay? 18 months, you know, you don't need to go too far back. So don't start, you know, going way, way back and thinking, yeah, this is the overall, the trend is bearish, but that was 5 years ago. Yeah. If you think about like GBP USD, the price from five years ago, we probably ain't gonna see those heights again anytime soon. Right. So you got to think about how the economy is doing, and that's where like fundamentals and what's happening in the world plays into it as well. So don't go too far back. But market structure, I'm telling you, if you get this bolted down, right, you will see massive improvement in your results. The main issues in regards to when I was unprofitable is because I wasn't reading the structure properly, right? When I started reading the structure properly, when I lose a trade, I rarely lose a trade because I've got the direction wrong. It's not the direction, right? When you have the direction right, it's just okay. You're trying to execute to the best of your ability. Sometimes you might get um too tight of a stop or whatever, right? Those are different factors though. As long as you have got the direction bolted down, now you have a good base, a good foundation to actually start building your confirmations on to say, okay, I think it's, you know, I know it's going this way. Now it's about how do I position myself? Yeah, that's what you want to be thinking of. So I hope this explanation helped you guys. I hope I kept it as brief as I can. Let me know in the comments if you like this video, if you need another explanation or you've got a question regarding it. I'll be sure to answer you as and when I can. Okay, so that's what it is for today. I hope this educational content you found valuable, and I'll see you guys on the next one. Peace.